So if you're a crypto trader and you decided to take a long weekend, and I mean a long weekend, 3 or 4 days, you woke up and you realized two things. Number one, Bitcoin and Ethereum are no longer at their all-time highs. In fact, they've pulled back double digits. Number two, Dogecoin, the crowd favorite, is hitting all-time highs. What in the world is going on? And more importantly, can we find some buying opportunities in these three coins? Well, I'm going to do just that with you. So let's get started. Hey everybody, Tom Gentile. Welcome to Tom's Trading Room, sponsored by Optionetics. Check out the description below. I've got some links there for some free goodies for those of you who are just joining us. Also, if you find this video at the least educational, do us a favor, like it below. Also subscribe, ding the bell. We'll get you these videos as soon as they're uploaded. So what's going on with these three coins, and how am I going to show you where I believe the buying opportunities are? Well, to do that, we're going to have to go in my podcasting room, get on my computer, and then I'll show you what I see as potential support points for all three coins. So let's get in there and get going. Okay, so first thing off the bat before we begin, I am using some tools here at tomsoptiontools.com. If you've never used these before and you want a free trial, click on the link below in the description of this video. It's near the top of the description. You can't miss it. Okay, so we're looking at Bitcoin right now, and as you can see here in the last couple days, we have had that pullback off of the all-time highs, taking us from near 65,000 coin down to below 55,000 before starting to try to recover. So we're in a very interesting area here. We've actually exceeded the lows of 2 weeks ago. We have monthly lows down, sitting just above 51,000. I believe that is a very good support point. I'm going to show you that in just a minute. But for all intensive purposes, the trend is still higher. If you take a look at all these lower highs, very significant ones, going back 100 days on the chart, we see lower highs at 30,000. We see lower highs at 45,000, at 50,000. And then, of course, this is the first low we've actually created that was lower. Okay, so today's low, the most recent lows, actually exceeded the last 2 weeks. We'll see where that ends up going. I would be a little nervous if we create a lower high and we do not exceed this high within the next few weeks, and then actually start to create some pressure down here near this support. But for right now, the trend still looks to be up. Let's take a look at Fibonacci charts, because that's going to give me some ideas of where the fib traders are in terms of where they see buy points are. Okay, so using the last 100 days, we see the closing low that came in right around the end of January. That was about very close to 30,000. In fact, the actual number is 30,423.10. From there, we created this lower, these higher lows and higher highs that came to a peak just about a week ago at 63,558.50. Now, you might say, wait a minute, Tom, we were above this. We were actually above 64. What we do is with our fib charts is we actually take the closing high off of what was recorded as the close of the day. So from there, we started to create a pullback. And we're getting pretty close to an area which is 51,000. It's actually 50,900. This is the 38% pullback. What this means is that based on this low back in January to the high recently, if we pull back to the 50,900 area, that represents a 38% pullback from this 100-day bull run that started back at the end of January. The 50% retracement, this means pulling back half of this move, would happen if we fall down to 46,990. And then the 61% retracement would be at 43,080. These are all three interesting buying areas. I usually discount the 61 because that's such a big pullback, but I find these two are very interesting buy areas if you do believe that the bull run is still going to happen. So if you look at the chart here, we actually have two things happening. We do have moving averages, which are saying right now we're in an uptrend, and we're above the 38% retracement level. Again, really closing below the 50% retracement level would cause me to look at this with some concern. Now let's take a look at Ethereum and see what's happening with ETH. So I'm going to leave everything the way it is. I'm going to move to ETH. So this is Ethereum. Ethereum looks very similar to what's going on with Bitcoin, but with one big difference. Ethereum did not make its low at the end of January. In fact, Ethereum's low is way out here. We might have to take this out a little bit farther because I don't trust a Fibonacci when the actual starting point of Fibonacci is all so close to where the data is beginning. That means that we could have seen lows farther back on the spectrum. Let's take this back 125 days. Now, I have not done this yet, so maybe 125 days isn't it. And when I'm seeing this, I see that, the beginning of the chart 125 days ago is also very close to the lows that we see with Ethereum. So we're going to take this back to 150 days. So 150, let's update this chart. And let's see if we can find a low. Again, really just, it's just still showing us that that we don't see a really great pullback here. All right, so I can either continue to take this back, or what I can do is I can use this area right here, this big pullback area here that happened. This could be the area that we're looking at for a low. Let's go ahead and use this. So that means I'm going to need to shave this chart down to about 75 days. If I bring it down to 75 days, that should do it for us. Yes, so we're going to start Ethereum's low right at the end of February. So the end of February, Ethereum had a low at 1422.58. The high for Ethereum just happened last week at 2517.08, and you can see over the last 5 days we've pulled back, and look at this. Very interesting things that are happening with Ethereum. First, Ethereum did hit its 38% retracement, and that is actually 209898. All right, so just under 2100. It also has the 50% retracement at 1969.83. Well, it touched that just a few days ago. So we have touched the 50% once. We've touched the 38% twice now. Where do we go from here? If we can hold this 50% level, this is a very good sign for ETH, Ethereum. Again, if we close below 1840, then we could be going back down into the 1400s. That's the way that I read this particular chart. So for Bitcoin, we had to use a 100-day chart to get its low. For Ethereum, we needed to use a 75-day chart, and we see that we are hitting that 38% retracement level just under 2100 and the 50% retracement level under 2000. All right, let's take a look at one more, and this is one that a lot of you over the last several weeks, if not several months, when I talk about cryptocurrency, have been asking about and telling me about. And it's not one that I'm invested in right now, but we're going to go ahead and take a look at it anyway. I have to go out to all cryptos because Dogecoin is not in the Coinbase exchange. You cannot trade Dogecoin in Coinbase, but you can trade it through Robinhood as well as some of the other coin exchanges out there. Symbol DOGE, not a stranger to most people. They've been hearing about this one for quite some time. Now, take a look at what's going on here over the last 75 days. You can see 75 days ago it was at a nickel, and you can see that even maybe 25 days ago it was trading at a nickel. If I change this and make this 30 days, then let's see if we can capture that nickel also. Yeah, it's still there. In fact, the nickel is really until very recently. So you can see this low coming along here. This is fine to look at it this way, but if I really want to spread this out some more, then I could actually bring this down to the last 15 days because that's where all the excitement has been with Dogecoin. So here's Dogecoin just above 5 cents, but it's not going to move the needle here in terms of fib levels that much. So we see that low, that bottom end low has occurred in the last 15 days. All the movement on Doge has really happened in the last 10 days. All right, so you can see from about 5 cents on the low to move up 15 days, and we just hit another closing high. Now, the all-time high was pegged up here at 45 just a few days ago, but the closing high just happened yesterday. So where does Doge go from here? I think with all this volatility, it's really hard to get a good fib level on it, but we can try it out. And I think that you could forget about the 38% retracement because it's actually been hit several times. But that 50 looks like a really good line, and that 50 is coming in right around 23.43 or almost 23.5 cents in terms of what's happened just in the last 15 days. So again, 38% retracement. It's at 27.57. It's been hit twice now, but it's also, we've come down and we've touched that 50% retracement level at 23.43 a few times as well. So I thought I would end this conversation on Fibonacci with what's probably the most popular coin going right now across the crypto universe, and that is Dogecoin. I also think it's one of the most riskiest coins to get into because it really offers nothing to the network and to the community, right? It's very speculative. That's my opinion on it, and I think it's going to go down just as fast as it's gone up. Hey, thanks again for watching the video. 3 things for you. Number 1, for more information on how we trade like rules-based traders, check out the description below this video. I've got a lot of free stuff there for you. Number 2, like this video, please. It helps support the channel. And finally, if you subscribe to the video and ding the button next to it, you'll get the next one as soon as it's uploaded. Thanks again. We'll see you on the next video.